Welcome to the Get Smart with Money podcast. I'm your host, Dayna Hernandez, financial planner and author of Get Smart with Money, Break Free from the Struggle, Build Wealth on Your Terms, and Rewrite Your Money Story. Here we talk about money, entrepreneurship, growth, and resilience, because financial freedom is about more than just numbers. Each week, you'll get practical strategies, inspiring stories, and the motivation you need to stress less about money and create more freedom in your life. Let's get smart with money together. What's the biggest mistake that you see people make when they're trying to build their wealth?
Wow, biggest mistake. I mean, there could be any number of them. It's different from everybody. I think the biggest one is what I call the coordination gap. It's what I'm speaking of. It's this fragmented advice. They're listening or they're doing things that maybe are traditional. It's because this is the way my mom and dad did it. It's the way that we perceive things are done. And the reality is there's a lot of other strategy that can be better served for people. They just don't they just don't understand it. And it's a literacy, education kind of mistake. I would say if I had to pinpoint one area, it'd be tax. The tax code is really favorable to business owners. It's
Yeah, it
not so
is.
much favorable if you have a W-2 job,
Mm-hmm.
but if you're not taking advantage of the right tax strategy and the right entity structure, and I pick on CPAs quite a lot because CPAs, you think they're handling it and they really
Yeah.
don't. The CPA, in many cases, not all, the accounting industry doesn't have the desire necessarily or the time to sit with the client and understand their business and understand their personal finances and develop strategies and plans that'll save them money. We have a client cohort that we track every year. In 2025, our client cohort for the year had an average first year tax savings of $48,000. That just doesn't happen by prepping your tax return.
No.
That happens by really understanding the code, the strategies, the different things that are available to us. They're not even loopholes, they're just in the Internal Revenue Code
Right.
that people don't know. And again, the CPA, the accounting industry doesn't do a great job of doing that.
No, they don't. I've recently switched to a different CPA. And when I
Yeah.
switched to this new CPA, she did take a little bit more time to ask me questions, and she didn't charge me as much afterwards either. I felt ripped
Good.
off by the other one for sure.
Yeah, yeah. I mean, that's fairly common. That's fairly common. And then I think the other big mistake is, from the financial advice side, creating the right financial strategy, the right
Hmm.
unified structure, tying your business, your tax, and your wealth all as one seamless system. When it's fragmented again, I come back to that because I think that's the big mistake that I see, especially as you're getting more and more revenue and profit through the back end of your business. Your business is not your wealth strategy.
Hmm.
Your business is the fuel. What you do as your vocation, what you create, and what you make money doing, not revenue, profit, what you make money in a profit, that's what builds wealth. And it has to be built over time and it has to be built strategically, um, very intentionally. It's not going to happen. That's another big flaw or danger. I think a lot of people, a lot of your listeners they're putting it off like, well, I'll sell my business one day, or I'll start saving when I have the money, or, thinking that more revenue in the business is going to solve all the problems. Revenue is necessary in the business, but if the structure is faulty, more money is not going to solve the issue. It's just going to make it worse.
Yes, right. A lot of people say that also that I've heard. I'll save when I have more money, when I start making more. It's like, no, you have to build that habit now. And then because I have like a separate account that I save money in for right now. And
Yeah.
it's fun watching it grow. I check it and I'm like, ooh, like it's exciting because I was never able to really save before
Yeah.
until maybe a year or two ago.
Yeah.
Yeah.
Well, you get a lot of enjoyment. I love logging into my, investment account and seeing it go up. I don't like it so much when it goes down, but I know the rules of investing. I know that over long periods of time, the equity markets permanently go up. They temporarily go down, and the temporary declines, we call them bear markets or drawdowns or recessions. Yeah, they're painful, but if you structure your strategy around, what's important about money and where you're trying to go, you ride it out and you keep fighting. You keep, you live to fight another day and you keep feeding it. When the market goes down, everything's on sale. Why is it that we panic when the stock market drops? We should be celebrating the day the market crashes because I can buy more if I'm still
Right.
in my accumulation years. It's a
Yeah.
mindset, it's a consciousness decision.
Exactly. I was just looking at a whole chart of like the last 100 years, and every time the market went down, that's the best time to buy. When a
Yeah.
big tragedy happens, like that's the best time.
Yeah. Yeah. The analogy I always use is if you love tuna fish and you walked into the grocery store and you saw the manager's special, the sign said tuna fish 39 cents a can, and it's normally $1.29, you'd get two shopping carts and you'd put as much tuna fish in there as you can, and then you'd have to think about how much can I put in my pantry.
Yeah.
But you would buy as much as you could at 39 cents, right?
Uh-huh.
We don't think that way with our money and our investments. We see that the shares of the S&P 500 are dropping and we don't want to have anything to do with them. In fact, people sell them. They
Right.
sell them back instead of
Yeah.
buying more. And it's like in every other area of our economic life, we love it when prices go down. And then when you look at your 401k, your IRA, your trust, your investments, you're like freaked out because it went on sale. And I'm like, no, let's condition ourselves to be greedy and say, hey, what Warren Buffett said, when there's blood in the streets, you take advantage. But we
Yeah.
don't we don't do that, right? We only want the tuna fish on sale. We don't want our investments on sale. It doesn't make any sense. But I would say it doesn't make sense, but it's the way God made us. It's the way we're wired. We just have
Also,
to we have to unwire it.
right. Yes, because nobody ever actually talked about it in that way.
That's
No
right.
one's
That's
heard
why
of
I
it
tell that
that.
story. It's a different perspective. And if
Hmm.
you know that, especially for young people, if you know over time the market permanently goes up, no one has ever lost money in the market if they just hold. You have to stay in the seat with your seatbelt fastened. Don't look left or right. Heaven forbid, don't turn on the TV and look at that stupid bar scrolling across the bottom of the TV set.
Yeah.
I call that financial pornography, and that ruins more people's finances than it helps. They got to give you the news, right? It's not
Hmm.
news, it's noise.
Hmm. It's how
Invest
they
for the long
want to,
term,
yeah.
stay out of debt, protect your assets, and always be buying, always be investing, and it will turn out for you. I can't guarantee much in life. The sun will come up tomorrow, I guess, unless Christ comes back, but that's another podcast.
Yeah. So, how important is having a long-term financial plan instead of only focusing on today's expenses important?
Yeah, I mean, that's exactly what we're saying. All truth in wealth accumulation exists in the long run. As soon as we start to shorten that term, all the wheels fall off because in the short run, the economy is not predictable. The stock market is not something we can plan for. So the only, and all of history, I've been investing for many, many years, probably 40 plus years. I've been an investor. You learn over time that modernity, everything we're experiencing today is an opportunity. Um, for the elderly listeners, I was born in 1969. The S&P 500, the year I was born, was 81. 81. No third digit, no fourth digit. The S&P 500 today is 7,800 going up to 8,000. The Dow Jones will be at 100,000 one day. because the
Yeah.
market permanently goes up. The companies, the great companies in America and the world are positioned because capitalism wins and capital flows. And if you can just hold on to that. In 1969, the year I was born, the Apollo 13 spacecraft blew up in space. There was a movie by Ron Howard called Apollo 13.
Right.
A middle schooler today has a cell phone in their backpack with more computing power than all the onboard computers on the Apollo spacecraft and all the computing power back in Houston at Central Command. Think
Wow.
about that. Over a 50 plus years period, that's where we've come to. What is the next 50 years of modernity going to look like? That just gets me excited because we can invest in that. That's the way people are going to make wealth, is to be able to invest that way.
And yeah, if you think about it, we're still in like the beginning stages of everything. And
Everything.
trillions of dollars from the baby boomers are going to get transferred over to the millennials.
Yep. It's going to be AI. It's going to be technology. There's 8 billion people on planet Earth today. Venture a guess,
Mhm.
Dana, how many people, there are 8 billion, how many people in the world today don't have internet access? Venture a guess.
8 out of 8 billion. Well, really just like the poor countries.
It's about half.
So is it really
About
half?
about 4.5 billion people have internet.
Wow.
That means there's 3.5 to 4 billion people on our planet that don't have internet access yet. And what do you think is going to happen over the next
Crazy.
10 years, 20 years, maybe 5 years, when all of those people are drawn up into the middle class and they have the internet, which you and I are on, Zoom right
Ooh,
now.
that's interesting to
They're going
think
to have
about.
Zoom. They're going to be able to communicate. They're going to they're going to be able to go on Amazon.com and buy. When was the last time you went to the mall in Reno? I don't ever go to the mall because I can go on Amazon. And in some cases, I got my box the same day. So half the world's population has not even been on Amazon yet.
That's
How
crazy to
cool,
think about.
how cool is that? And you
Yeah.
can invest in Amazon. You can invest in all of this infrastructure. We're not there in space yet. I mean, Elon Musk is kooky. He wants to colonize Mars. Well, guess what? If he does that, 50 years from now, I won't be around. You will be, hopefully. But how's the
Yeah.
world going to look? It's the same way that our parents and grandparents and great parents, grandparents. I remember my first job out of school. I didn't have a cell phone. We didn't even have email. I remember my
Wow.
first email account when I was in corporate America. Gosh, that was probably in 1990, 91.
Hmm.
And you and I have been communicating for several weeks over email.
Yeah.
That's
Yeah.
kind of cool, right?
Yeah, that's crazy to think
We can
about.
invest in that. We can build wealth for our families, for ourselves, and future generations because we can invest in that type of technology. It's just reshaping our mind into thinking, how do I do this? The information is there. It's not on TikTok. It's not on Instagram. It's in real sound advice. People that can counsel them on life insurance, real estate, um, business structure. Um,
Hmm.
that's not an expense. I say you have to pay for good advice. It's too expensive not to.
Yes, it's too expensive not to. That's for sure. Yeah, a lot of people don't want to get into any types of financial policies or products because of the fees, but everything has a fee.
Yeah.
You have to pay the fee to actually get a good return.
Yep. And it's all a trade-off. You have to understand that. What
Hmm.
you think is going to be cheap is actually cheap. What you think is going to be worth it will be worth it.
Right? Yeah, that's for sure. Many people avoid talking about money. So why do you think the conversation is so difficult for so many people?
Ooh, that's a good one because I had that too when I was a young boy. We didn't know we were poor. Um, we just got on our bikes and went around the neighborhood and, life was simple, life was fine. Um, I think people don't talk about it. It's maybe a lot of families just don't teach it. Either mom and dad didn't learn it. I was fortunate. My grandfather was a student of finance and investing, and he did save me in that regard. So it helped me. But a lot of families just don't talk about it. It's like talking about, I don't know, sex or religion.
Yeah.
It's hard to talk about those things, or politics. Hard to talk about those things. But I think it's important. Get educated, read, we can put in the show notes a copy of this ebook.
Yeah.
I'll give it away. The Wealth Creation Scorecard, we can give that link. Understand where your money is going and understand the why behind those things. I think that's the lesson that I wish I had, decades ago.
Mm-hmm.
And nobody's going to do it for you.
Right.
You have to decide for yourself.
Mm-hmm.
And for a lot of families, unfortunately, in our country, they're in a cycle. They're kind of in a downward spiral. It's like alcoholism. If you have alcoholism in your family, the propensity for future, generations is to have an addictive personality.
Right. Yeah.
I don't think it's too far removed to say that money is the same. That's why wealthy families get wealthier, and lower income families, which I was squarely in when I was a boy, a lot of people don't ever break free from that. And that's unfortunate in the richest country in the history of mankind, the United States of America.
Yeah. It's weird. It's ironic for sure.
Yeah.
I remember when I was probably around maybe 10, 12, my mom took me to the bank or credit union, and we opened, me and her, a Roth IRA. So that was like my first kind of introduction into some sort of investment vehicle. And from then on, that kind of stuck with me. And I think that's kind of why I was introduced to financial services and I wanted to do it. And it just
Great
sounded like
reason.
something that I would want to do, other than the fact that I was in debt and I needed to get out of debt. But I was like, this is actually, I think, something that I understand. Like, I already kind of knew about the Roth IRA, and I was like, okay, well, I can learn about a whole ton more then. So it was
Yeah.
just that one little thing that my mom did.
Yeah. Well, and because you found yourself in debt.
Please like, review, share, and subscribe to this podcast, and follow us on Instagram at GetSmartWMoney Podcast, as well as checking out our website at GetSmartWithMoneyPodcast.com.